business news now, and the U.S. Federal Reserve is set to announce its next decision on interest rates. Markets are expecting a 25 basis point rise or perhaps keeping base rates stable. The U.S. missed growth expectations for the first quarter, leading some to believe regulators will ease off on efforts to cool the economy and ease inflation. Price increases are down from last summer's 40-year highs, showing the tightening has worked. But the Fed's medicine for inflation comes with side effects, including the potential for lending to dry up and trouble in the banking sector. But so far, unemployment remains low and consumer spending strong. For more on this, let's go live to London and speak to Naeem Aslam. He's an analyst at Zay Capital Markets. Naeem, thanks for joining us on the News Hour. So the Federal Reserve is notoriously difficult to predict, but what kind of bets are traders making about the announcement on rates?
Sure, thanks for having me. So the Federal Reserve is very much focused on its monetary policy stance, as you correctly pointed out, because of the stickiness and the stubbornness in inflation data. So the Fed has one task at hand right now, and that is the primary focus, and that is price stability. And it seems and it appears that they are willing to sacrifice that at any cost to a larger extent, because if you look at the regional bank index over in the United States, we've seen a massive drop in that. So the First Republic Bank's collapse and failure of that has still rumors out there that we are likely to see more banking failures in the United States. And we have already seen a large number of banks, at least 3 banks, fail in the United States due to higher interest rate. But the Fed is very much still focused on that. They need to bring price stability in control. In order to do that, they have to increase the interest rate by 25 basis points. At Zay Capital Markets, what we are more focused on is what the Federal Reserve's narrative is going to be from here onwards. We all know that, okay, 25 basis point interest rate hike today is a done deal. But when are we going to see a pause in those interest rate hikes?
Yeah, I think many people are wondering that exact question, not just in the U.S., but around the world. And we've just seen the U.S. Treasury say that it needs Congress to approve an increase to government's borrowing limit before the 1st of June or risk a default. How does this deadline affect the Fed's thinking?
I think the Fed is very much, the Fed knows how this particular political drama plays out. And this is not the first time that the Federal Reserve is reaching its artificially created debt ceiling, which is always the can is kicked down the road. But for us, the question is how long that the remaining of that road is left in order for the Federal Reserve, or in order for the Treasury, or in order for the U.S. lawmakers to continue to kick the can down the road. Because it seems like the de-dollarization element is very much the new popular phenomena among many analysts and among other entrepreneurs and among governments. So if that continues to pick up steam, who's going to buy the debt?
Naeem Aslam, you've left us with a lot to think about. Thank you so much for your analysis live there from London.
Thanks.
Now to other top stories from around the world. S&P Global has slashed First Republic Bank's credit rating into junk territory. That's after the U.S. lender was seized California banking regulators. S&P cut its rating to CC from B+, saying it expects defaults to be a virtual certainty. They also lowered credit ratings on First Republic's subordinated debt and preferred stock. India's services industry has risen to its quickest pace in almost 13 years in April. The S&P Global India Services Purchasing Managers Index rose to 62 last month, staying well above the mark that separates growth from contraction. The strength in the services sector contributes to more than 50% of the country's GDP. And Ford Motors has posted a $1.8 billion profit in the first quarter, reversing a previous year loss. The company has rebounded from supply chain problems, seeing increasing demand for its trucks and SUVs. Ford has also cut prices on some of its electric vehicle cars and is now moving to make low-cost batteries to stay competitive in the EV market.